I feel like I want to trade 1 hour, I want to trade 12 hours. Is it okay? Of course you can, but then you try to get in the position that is have a advantage on your risk reward ratio. If you come in here like online casino, you'll be addicted. When you're going addicted, you are going into a wrong cycle. Today I will touch more about the emotion parts and also which is we call risk management, because in trading there's not like 1 + 1 = 2, so that we need to use a way of thinking as probability to do our decision making on trading. Because as you guys know, I always emphasize skill, strategy just maybe only 30% that is affecting on our trading performance, but eventually 70% is come from our decision making on emotion handling and how you hold a position, how you add on a position, how you defend your position. Okay, so that there is no standard answer to let you know SOP formula how you need to go to do. You just need to have a right framework on it so that you can do the most suitable decision, not the most right decision for yourself. So today David Young wants me to share about the so-called DY strategy, also aka support and resistance. So support resistance, I think that maybe some of you guys have already know what is support resistance because it's very basic. Okay, I just give you the standard SOP guideline for you guys first. Means that every time when I'm using support resistance, of course we use like HAFR, like 5-star everything, but when we are going into the so-called support resistance, this is the SOP I will take. The first thing I will do, okay, just ignore all these lines or anything, and doesn't important. This is a bear chart that you have on. So first time I will go for 4 hours first, and then I set it to candle. Because just now, like we are using 5-star, we're using Heikin Ashi, but on the candle we need to know the specific price point that it goes to, so that I will use the candle. Okay, so why is the reason I'm using 4 hours? Because 4 hours, if I zoom out until like here, I can roughly know about the recent market condition or situation. Because why? As you see, this one is 17 August, this one is October 10th, so it's about 2 months time. You can zoom in to like this big, but you cannot see like the whole picture of the market. So what will I do? I will make it zoom out within the range about 2 months. Okay, no need to be very specific, but just that you want to know what is happening recently. Basically, I will zoom out like here lah. So what will I do? It's very simple, just draw a support resistance. What is a support resistance? You need to find out this recent market movement or fluctuations, which is the relative top, which is the relative bottom. So for this scenario, this is very obvious. Why? Because here is the top, right? This is the first top, second top, third top. Okay, this is like slightly exceeding, but it's okay. This is the fourth top. Okay, so if I want to draw a line, I will link it within the most dotted. Basically, I will draw it around here. Why? Because this one touches, first touches, second, third, fourth, fifth. So this is the resistance or support I will draw on here. So someone will ask, if I see that the line should be up here, is it I'm wrong? No, there's no very accurate answer on the support resistance. Support resistance is the something like a range. So that as you can see, actually this range we call can be resistance range. Okay, I will change it to red color. Okay, so that this box from 12,000 until 12,180, this $180 gap you can consider is a resistance box. So when you're drawing resistance lines, we will always call that, oh, this is the line that if breaks, then it goes up. But I will use it as a box for me to have a range that of talking about, okay, if the price is like coming up here but doesn't breaks up, then it just consolidating within the box or just break down back and breaks the box below, then I will consider it as this is the valid resistance. Okay, this is how we draw the line and how we make use of the resistance. So after we are drawing resistance, we need to draw a support. I just make it quick. It's around here, right? 1, 2, 3, 4, like something like here. Okay, so this is my another support. So if I want to draw more range, I can make it here. So this is what we call a staircase. Okay, why we are calling it staircase? Because this is the so-called the range that is being up and down within this period. Why? Because as you can see, from 3rd of August until 4th of September, you see like very short period of time, but actually it's have been past 1 month already. So within this 1 month, what you do is just when the price is below on the support, you just long, and it's like approaching to the resistance, then you short. Okay, so within this month, actually you can catch like this point, like somewhere here, okay, somewhere here, and somewhere here. Okay, so so that if you have caught all the chances, maybe you can catch 1, 2, 3, 4 times. Okay, maybe the last time will be failed, because if I long here, this is the fail shot, I will fail long. So this is how we make use of the support resistance. Why we call it staircase? Because as you can see, like the Bitcoin price is like going like staircase, level by level, it goes up and up. So I just draw for you so that you have a visual understanding. Okay, so this is the box. Okay, this actually you can draw it to like this. This is the second box. Okay, so just vice versa, you can find every significant price level differences will have a staircase. Okay, this is the first one, second, third one. This is the very crucial concept that you need to get. You need to visualize on these boxes, or else later on we talk about throttle or about add-on position, you will be like, how I gonna add on the positions? Because every time when we add on position, which is we want to have a home run win, which is we want to aim for at least 50% appreciation of our own wallet, the whole wallet lah. Okay, not just the margin. So that the best scenario that I have met is 1.5 times of our wallet just increase within a trade. So that this is important, that you need to know the concept of staircase. You need to find the right point to do the throttle. So basically, saying in the easy perspective, you will add on position on here, place on here. Why? Because it breaks up your so-called staircase. When it breaks up the staircase, means that the price is shooting up to the next level already. So that is a time for you to do the throttling. Then when it goes up to the next level, actually your cost price, which is your after average cost price margin, will be around here lah. Maybe the first position is here, the second position is here, so that final position average will be around here. Okay, so that you will have a huge advantage on like playing a combo play on this play. Okay, let's say the first step, 4 hours, I had drawn the line, resistance here, support here. 4 hours is like for you to know the recent situations, but it make use on like if you're a trader, you want to trade on 4 hours, the time frame you are trading is like more on mid-term trade. Mid-term trades means that after you place in the contracts, place in the order of positions, you need to hold the position for at least more than a day or two. So normally it will take you up to maybe 3 to 5 days or even 1 week. So this is how you place mid-term trades, because as you can see, let's say I really long on here, 12th of August. Actually, if you really want to take profit, you are trying to take profit at the resistance, right? So as you can see, if you come enter here, then you exit here. It's a 5-day journey lah. But it seems like a very long time of period, but benefit of using this method of the mid-term trade, you can trade even though you are busy, even though you are having your job work 9 to 5. But if you are using mid-term trade, it still can make money for you, because you no need to every day to stare at the chart. You just know that, oh, now the price is at the support level, then I just go in. So I just set the take profit around at the resistance level, which is here. So you just make it and leave it, so that after 5 days, it maybe can automatically help you to take profit, because since that you have already placed the take profit order. So 5 days like a bit long lah, okay, for a short-term trader perspective. But as you can see, the profit is 5.91%. 1.91% is equal to how much? It's equal to 591% if you are using cross leverage. Isolated leverage is way more dangerous or way more riskier than cross. Cross is much more standard, it's much more easy to calculate, it's much more flexible for you to adjust your positions on your leverage. But the only risk that you will take on is if it really touches your so-called liquidation price, you will lose up your whole wallet, even though you just enter like 1-3% on the margin, but eventually you will lose 100% of your wallet. If you guys can understand Mandarin speaking lah, you just go to my YouTube channel, you can find the cross leverage versus the isolated leverage, how you can trade and how you can make use of the facilities, and what is the difference and how is the benefit and what is the risk on it. Now I will use as a perspective on trading on cross leverage. Cross leverage is like you are trading with a leverage of 100x. So that how we calculating the profit is, as you can see, 5.95% means that after multiplying hundreds, which is my leverage on cross, it will be converting to 591% ROE. You can see your paper, P&L will be 591%, means that if let's say you enter a position margin of $1,000, after 5 days on this, if you catch along on here, you will basically earn a clean net profit of 5,900. So in total, you will have a balance of 6,900 in your account eventually. Why we use 4 hours? First thing that we can know the recent market condition, and also I can have just right time period for me to trade, because like say 5 days for me is like a sweet point already, because the margin is huge enough so that it's a very good position to trade, so that you have a margin for profiting. If you ask me, Anderson, I feel like I want to trade 1 hour, I want to trade 12 hours, is it okay? Of course you can, but one thing to take note is that the larger time frame that you're using for trading like support resistance, it takes you more time to, like let's say if you're using 12 hours, the bottom price is like $1, the ceiling price is $10. From the support line to the resistance line, it maybe takes 1 month only, it will go to once. So that if you really want to grab the chance, you need to be very focused, or even though like after you're waiting for a month, it even doesn't hit the price target that you want. Okay, so this is what my reason why I'm using 4 hours. I just want to give you the concept. The concept is, the larger the time frame, it takes more time for the price target to hit. Okay, so that you can choose the time frame. But for my version of support resistance, what will I do? My SOP is using 4 hours. For me now, I'm just demonstrating as a mid-term trader. Okay, not going too long, not going too short. After we go for the first step, 4 hours SOP, after we draw the line, okay, we know that roughly where is the price now, which is bottom, which is the ceiling. So the second step is very simple. Now we know the relative bottom price and also the peak price of the recent market. So how we gonna enter? Because when we just observe on 4 hours, it just observe. We just want to know which is the relative low and high. So how we gonna make decision of entering position on it? I will use 15 minutes. Why am I using 15 minutes? Because I want to use a smaller time frame for me to have a further, more deeper view on what is the relative high or low now. If I want to long, I want to try to long at the most bottom of the bottom. So the first bottom is the 4 hours support. The second most bottom is the 15 minutes. Like we are taking more advantage to have a better pricing, better costing on the long position, so that I can take lower risk and my cut loss can be more further, so that I can decrease my probability of being eliminated from the markets. And we just come back here. As you can see, just now we are drawing 4 hours. Okay, you can see the range here. So now let's say 15 minutes. Okay, let's say we are around here. Because until here, maybe we have no any move that we can make use, because we are still need to know which is the relative high and low on the 4 hours, so that after here we know that okay, the box is around here, because this is the peak, this is so-called the bottom, so that after this we have a so-called the reference already. So if you ask me, this is the 15 minutes, where should I place my long? Okay, basically I just place my long around as near as to my 4 hour support, because as you can see, before here I already know this is the bottom price already, because it just goes down and it bounces back up. Here is also first, second, third, fourth. So here, when the price is moving around here, actually is the price range is good for you to go. Why? It's always come back to the risk reward ratio if you have watched my YouTube channel. So if you ask me, here can enter or not, of course you can enter. Okay, so just maybe I enter here. Is it sure win? Of course not. Okay, there's no sure win in the trading world. Okay, if anyone tells you about my trading strategy is sure win one, I don't say that it's impossible, but I never cover this kind of person or so-called strategy lah. Don't trust on the so-called holy grail. Okay, there's no such thing. Everything is about probability. We are trying to place ourselves on the place that is highly will be happening. Okay, so that why we are placing long here, because it's near to the support, so that my highest probability that I'm taking that this green line, the 4 hour support, will be bounced back up, so that I just try to enter a position around the very approaching to the support. So even if the price come back up here, it just resists, doesn't goes down again. Will I place a long? I will place a long. This one in now scenario, I just using support resistance, but if you are integrating with the 5-star, HA, FR, blah blah blah, you can see already. Let's say 5-star also give you like 3-star, it's going green light already. Of course here, you need to go in already. You are not trying to be right, but you are trying to go in the rational price point. So let's say I go in around here. What is my risk reward? How will I put my stop loss? I will put my stop loss away of my 4 hour support, like about 200 or 300. So this is your personal preference. For me, I will always put like 200 lah, at least. So let's say I put 200. This is like 10790. So I will put around 105 something. Okay, let's say I put around here. Because here got a needle here, what will I do? Actually, I will place extra $100 for me to prevent from this needle. So that 10438, okay, around here. So this will be my so-called loss, okay, my potential loss. So now I draw my potential reward. Okay, as you can see, my reward is how much? 9.7%. Okay, this is my potential reward. 5.96. So 9 point something we take it 10 lah. 5.96 we take it 6. So how much is the risk reward ratio? Okay, you just take 10 divided by 6. Because 6 is your loss, now 10 is your reward. So your risk reward ratio is 1.6. Before I say is it worthwhile to trade, I just ask you guys, is it worthwhile for me to place a trade around there? Okay, yes, right. Okay, it's very good trade. Like you are doing business. Okay, when you're doing business, you are trying to cut your cost as low as possible. So your risk is like your cost. When your cost is lower than your so-called profit margin, so this is definitely a worthwhile trade for you. For usually, I have a demand on my risk reward ratio at least above 1. You try to have a risk reward more than 1. Means that you don't want to have the risk is larger than your reward. Okay, make sure that your reward target is larger than your risk, or else you are doing some risky business deal. Like you're just imagine when you're doing business, you are trying to take in the stock that is very high cost, but your profit margin is just lower. This is not rational action for you to take. So first thing, you will try to find a relative low and relative high. Then you try to get in the position that is have a advantage on your risk reward ratio. Of course, when the price is approaching the resistance, there's no way for you to place a long because the risk reward ratio is making no sense. But if your risk approaching the resistance, what you can do is placing a shorts. Because when you're placing a shorts, it's like opposite. Your risk reward is very rational and it's very good. It's a good deal. So that when you're doing trades, you are not come here to I want to do it right. Change your mindset to I want to do a good trade. Even though the trade is eventually you lose the trade, but as long as the risk reward is good, is like 1 to 2, this is so called a good trade even though you lose the trade. If you're coming here like online casino, you'll be addicted. When you're going addicted, you are going into a wrong cycle. Then you just keep losing money, I can guarantee you. So make sure the first step, make sure every deal that you are making is potentially can make you profit. I'm calling net profit, means that the margin profit after subtracting your potential loss, you still have a extra profit that's potentially you're going to get it. So that in the long run, by the power of compounding, you will be making money. Double your wallet, triple your wallet. I can guarantee you if you use the way that I teach today, not the skills but the concepts and the emotions, mindset tweaking, you will be doubling your wallet. Just that you need to have the knowledge or have the right mindset or emotions to handle when the opportunity comes. If it breaks down, okay, I know that the trend maybe is just a manipulations. It's just like go up and then go back down. So 7% is without leverage. Let's say leverage after 100 times is a 700%.